Hello, everybody. Welcome to today's webinar with your very own Birchal. My name's Emily. I'm the Senior Campaign Lead here at Birchal. And just before I introduce you to Matt, I'd like to begin by acknowledging the traditional owners of the land that we're coming to you from today. Birchal's based on the lands of the Wurundjeri people of the Kulin Nation, and we pay our respects to their elders past, present, and emerging. So today I'm joined by Matt Vitale, the co-founder and CEO of Birchal. For those who don't know, that Birchal and Birchal Financial Services are intertwined, and we're working on the Birchal crowdsourced funding offer that's coming up. A few of you might be a little bit unfamiliar with crowdsourced funding or CSF, or you might know it as equity crowdfunding, but essentially it's a relatively new form of fundraising here in Australia that started in 2018. And it allows small businesses and startups to raise capital from a large number of smaller or retail investors, as well as wholesale and sophisticated investors through an online platform such as Birchal. So instead of seeking funding from traditional sources such as venture capitalists or banks, companies can turn to the general public, and often that's their communities, to raise money in exchange for equity in their business. So Birchal Financial Services will be the licensed intermediary for this offer. And I would like to remind everybody who is here today that the information and discussion in this webinar is for informational purposes only and should not be considered as financial advice or recommendation to invest. So please do your own research. And if you've got any questions, head to birchal.com and always consider the offer document and general CSF risk warning before investing. Now, how today's session is going to run, I'm going to hand over to Matt in just a moment, who's going to take us through a great presentation all about where Birchal's come from and what Birchal is looking to achieve with this capital raise, and then we'll switch to a Q&A session. So if you look at the bottom of your Zoom screen, you will see a Q&A bubble. So if you've got any questions during the session, please pop them in there, and then we'll endeavour to get through as many as possible at the end of the session. Obviously, if we run out of time, you're always welcome to reach out to the Birchal team or Matt himself to ask any questions. We're also recording today's session, so if you do need to jump off early or you'd like to send it to somebody you think might be interested in investing in Birchal, a recording will be sent around afterwards. So without further ado, I'm going to hand over to Matt.
Thanks so much, Em, and really delighted to be here again. And thank you, Emily, for all of the amazing work that you do for Birchal clients, hosting these webinars and hosting our podcast. Really always a delight to be on the other side, eating our own dog food, I suppose, so to speak. But I do have a presentation to take everyone through, and I am mindful that there are many Birchal shareholders that are interested in this opportunity and that are familiar with Birchal, but there are also many people that are somewhat new to Birchal. So we're going to spend some time kind of bringing people up to speed on who we are. Is that sharing okay, Emily? Yeah.
Yes, it is.
Brilliant. Okay. Just an important note at the outset, this is general in nature, and always consider the offer document and general CSF risk warning before investing. Birchal essentially simplifies fundraising so innovators can get back to doing what they do best, shaping the future. And we do that through Australia's crowdsourced funding regime. We have an incredible team building Birchal. I'm joined by Adam Vise, who's Birchal's chair, an extensive experience in equity capital markets, also treasurer of Australian Unity. Kate O'Keefe, an incredible product executive, many years at Cisco, Boston Consulting Group, and is also the founder of HeatSeeker, one of Australia's most exciting up-and-coming startups. Judy Anderson-Firth, a long career in startups and innovation, and one of the founding members of the Startup Network. Rod Bristow, a recent appointment to Birchal's board. There's Rod there, and a really exciting announcement this week of Rod joining the team. And Darren Westlake from Crowdcube, co-founder of Crowdcube, who's joined as a strategic advisor, and we'll hear more from Rod and Dom, one of Birchal's major shareholders and keen supporter, a little bit later on in the presentation. Essentially, the problem that Birchal is solving is the critical funding shortage that exists for innovation and startups. And this is a widely recognized problem, as acknowledged by the Reserve Bank, the Productivity Commission, the now defunct Corporations and Markets Advisory Committee. Equity crowdfunding has really stepped in to help plug this gap, particularly for early stage investment. Australia lags behind many other developed economies for early stage investment, research, and investment into research and development. And our growing venture capital and angel ecosystem has its own limitations. There is a particular bias towards B2B SaaS businesses. The vast majority of opportunities are not a fit for the traditional return the fund model that VC funds apply. And many of the established VCs in Australia have moved up the chain to later stage opportunities, compounding this issue for early stage businesses. And there are mooted changes to the sophisticated and wholesale investor test that could potentially reduce the pool of capital available for startups and SMEs. Birchal solves this by providing access to a national pool of over 10 million investors. And we can provide funding through a wider range of business stages. 25% of the offers that we've hosted in FY24 were for pre-revenue businesses, equally businesses that are more substantial with material revenues have found success with crowdfunding as well. But it's more than just capital. Many of these rounds are thought of as community rounds, as people telling stories, building communities and raising capital online. It is a regulated regime, so the governance requirements that companies need to put in place in order to raise through crowdsourced funding put them in a far better position than had they been raising privately, and we've seen many examples of this. And it is a broadened investor base, which means that it reduces the reliance on single investors and opens up a range of opportunities for companies. And we're finding a lot of success with this. So it's a really exciting time. Crowdsourced funding has been able to unlock a national pool of investors. There are over 10 million investors in Australia. These are people that have investments outside superannuation and the family home. 175,000 investments have already been made into crowdsourced funded businesses since we've launched, and approximately 130,000 investors. So we can see it's just a fraction of the potential investor universe. The regulatory framework that we operate within is robust. It is legislated. There are robust consumer protections. ASIC has commented that the crowdsourced funding regime appears to be operating effectively, and it absolutely gives many people comfort to be raising capital and investing within a regulated rules-based regime. Essentially, there are two game changers that allow us to do what we do. The first is the proprietary limited companies can now have a potentially unlimited number of investors, whereas previously you'd need to convert to a public structure once you got over 50 shareholders. Now, anyone that acquires shares through a crowdsourced funding offer is excluded for that test. And Birchal, as an example, is still a proprietary limited company, but has 1,600 shareholders, just like many of the businesses that we've hosted offers for. The second game changer, and perhaps the most significant, is that these offers can be advertised broadly, which means that modern marketing techniques, online channels, specifically digital advertising, are all incredibly powerful tools that we can use to build audiences for companies that are raising capital. And Birchal has been Australia's leading equity crowdfunding platform and growing this industry over several years. We've just ticked over 300 successful deals, over $218 million invested through the platform, 300,000 members, 179,000 investors. We've had greater than 70% share of CSF funding volume since 2020. The most recent figures are here. But we have huge ambitions. Birchal has an ambition to be a significant marketplace, the marketplace for startups and SMEs, in a similar vein to other large digital marketplaces. As we can see here, REA, Car Sales, Seek, the technological innovation that enabled these large marketplaces was really the introduction of browser technology. And most of these businesses used to exist in the back pages of newspapers. We believe and have high conviction that in many years to come, the deregulation of securities laws that occurred in 2017 and in Australia and around the world will be thought of as the watershed moment that gave rise to this opening up and liberalisation of the capital raising markets, democratising access to capital for founders, but also democratising opportunities for retail and wholesale investors. And now we are set up for success. It has been a challenging time for equity capital markets and fundraising over the last few years, particularly coming out of over a decade of near zero interest rates, as the economy has transitioned to what a higher interest rate environment looks like. But equity crowdfunding and Birchal has been particularly resilient over the last few years. As we can see, 22 was the high watermark, but 23 and 24 have seen fairly stable funding volumes. And perhaps one of the major reasons for this is, as an industry, we are still in our ramp-up phase, looking at the experience overseas, where equity crowdfunding is more mature, accepted, and more significant. That they have all gone through a ramp-up phase as awareness builds for what is essentially a new form of fundraising and something that is an alternative to established methods of raising capital. So when other parts of the financial system has perhaps declined over the last few years, that ramp-up has perhaps supported the resilience that equity crowdfunding has been experiencing, which is particularly exciting for the next phase of the economic cycle. And as the cycle turns, we can look to and expect to resume that trend growth that we were experiencing pre-22. But it has been necessary for Birchal to look at its operating efficiency. And earlier this year, we implemented a cost reduction program really to reduce approximately 30% of costs from the business, which I'm delighted to say has been a really successful exercise. The first quarter of this financial year, we've seen a 15% increase to our revenue, a 42% increase to our gross profit, and a 22% reduction in costs. And this has largely been aided through implementation of a range of new revenue lines, introduction of marketing services, an increase to our success fee, and a strategic refocusing of growth initiatives that are producing revenue on a nearer term horizon. Now, all of this was possible because of a range of investments that we've been making into our platform over several years, so we can operate with a more efficient engineering team, and it has been a successful exercise. As the market turns, we will be in an incredible position to operate as a leaner, more efficient unit. But Australia's story is just one, and one that is perhaps later to the party than other equity crowdfunding industries around the world. And this is helpful because we can look to overseas markets as a window and indicative of what we can expect to come in the years ahead. there is a favourable market outlook, and this is probably the challenge in Australia, is that the stage of growth of the equity crowdfunding industry has encountered these macroeconomic headwinds. But many people expect that that next year and the years to come, that the economic cycle is turning, and this is evident with a warmer IPO market. And expected interest rate cuts, perhaps in the first half of next year. Longer term trends, rising stock ownership among Generation Z, focus on innovation, sustainability, and even challenges in the housing market, certainly in Australia, have shown that people, particularly young people, are looking for alternative ways to build wealth, different to how our parents' generation have. And the other long-term trend, which is a positive and indicative of the opportunity ahead for Birchal, is the decline in listed markets post-COVID. Many companies are staying private for longer and thinking about alternatives, sources of raising capital and alternative forms of liquidity. And this presents an opportunity for crowdsourced funding and other adjacent opportunities and services to become systemically important as the landscape for raising capital changes. But if we look overseas, the UK, which has a far more mature and developed industry than Australia, is already starting to return significant amounts of capital to investors. We can look at successes like Revolut, Monzo, and many others that raised their earliest rounds of capital on equity crowdfunding platforms like Crowdcube and Seedrs in the UK around 2015, 2016. And these businesses have gone on to become some of the biggest businesses in Europe now, many fintech businesses, which give us, I suppose, a window as to what we can expect in Australia over the years to come. But we have already had some successes, despite the relatively nascent stage of our industry. Biome Australia was the first company to be funded by Birchal in 2019, which is now listed on the ASX. They raised a few $100,000 at a $6 million pre-money valuation. They listed in 2021 at 40 million inferred IPO price. I think their market cap is approximately 140 million at the moment. Thriday is another great example. Raised $3 million on Birchal in 21, $6 million in follow-on investment led by NAB Ventures. Many other successes given the very early stage of our industry. But growth economy businesses are at a significant disadvantage in Australia. A recent report commissioned by the Australian Business Growth Fund has actually quantified the gap in equity funding at 38 billion. Growth economy businesses seek more external funding than they are able to provide, than they are able to receive. And we have high conviction that equity crowdfunding will be a critical part of the solution to this funding gap, which is holding us back as a nation. But it's more than just what we're doing in the equity crowdfunding industry. And really the goal is for us to expand the footprint. So many other parts of the financial system see equity crowdfunding, crowdsourced funding for what it really is, an incredibly powerful and efficient piece of regulatory infrastructure that gives companies access to a national audience of investors for over 10 million. In a regulated and transparent way. So this is the goal ahead for us, is to expand the footprint. We've caught people's attention with what we've achieved so far with businesses that are mainly consumer facing and have high mass appeal. But as you'll see with some of the initiatives that we've been focusing on this year, is really inviting people to consider equity crowdfunding as a vehicle to aggregate multiple types of investors rather than a public-facing discrete source of funding. We have a highly scalable revenue model. We've made some adjustments to our success fees. It is predominantly success-based, and we've increased our success fee from 6 to 7.5%. And this is broadly in line with overseas platforms. We are still comparatively cheaper than global equity crowdfunding platforms. But we've also introduced some additional services, marketing services, and historically, all of our fees, all of our revenue has been driven by core crowdsourced funding success fees. This is just the first quarter of FY25, and as you can see, marketing services become a more significant part of our revenue. And over time, this will be our strategic focus, is to diversify our revenue streams around this core crowdsourced funded offering. And again, definitely taking our cues and inspiration from large platforms around the world and looking how they have diversified their revenue around these core opportunities. So marketing services for FY25, these will be expanding to Birchal Private, which includes our syndicate initiatives. And I'm delighted to say that that light blue revenue piece of the chart is already starting to show returns. And I'll take you through these in a moment. But also media membership fees, looking at examples from overseas platforms as well. But Birchal is fundamentally a marketplace platform that has, as a platform business, network effects accrue to the platform. So the first part of our journey, the first phase of our journey, was really defined by a hyper focus on the founder. And that was a strategically important decision because starting from nothing, I suppose, back in 2018, no investors, no distribution. It was important to focus on one side of the marketplace. And it has been a successful strategy. The early days, we spoke about not telling the Birchal story, but telling the stories of the companies that trusted us to host their offers. And really, the Birchal audience was the accumulation of the audiences of all of the companies that we hosted offers for. Over time, that has changed, and the Birchal audience has really started to take a life of its own. And as we move through the next phase of Birchal's development and the growth of the crowdsourced funding industry, it will be our focus on the investor that will really define our success. This is absolutely driving all of our focus in product development and growth initiatives, and some exciting developments to mention as we progress. So looking ahead for 25 and beyond, we are building the foundations of Birchal Private. So earlier this year, we were successful in receiving a grant from Wurundjeri to stand up a specialized angel network, which we've called Birchal First. Now, this has really been in response to many conversations and interviews that I've had with power users and high net worth investors active on the Birchal platform in the first part of this year, understanding how Birchal can provide more relevant products and services to this part of our audience. We've decided with the Birchal First initiative to focus on hardware technology businesses. We felt that was an area that was perhaps underserved by investors already active in Australia's venture and innovation ecosystem. And I'm delighted to say that we're starting to achieve quite incredible success. Our first successful deal from the Birchal First syndicate, Dovetail Electric Aviation, closed successfully a few weeks ago. Core Magna, our second deal, so at-home heart monitoring device, has raised close to 700,000. That offer opened earlier this week, and Vault Volatile was also opened with incredible traction. Now, just to contextualize, the Launch Vic grant is designed to encourage $6 million of investment into Victorian businesses over a 2 to 3 year period. Given the early performance of these few campaigns and the pipeline looking ahead into 2024, I have high conviction that we'll be able to exceed those targets well in advance of that, perhaps even within 6 months. But it's not just about the Birchal First Syndicate. It serves as a blueprint and an invitation for others to build similar syndicates, and is the first of several initiatives that are really exciting, in which we wrap up as this, I suppose, Birchal First pillar of what we are building and what we are bringing to market in response to the needs, wants, and wishes of investors and in the Birchal community. The second strategic pillar is, and an extension of Birchal Private, is over-indexing on investors. Now, delighted to announce that we've appointed a syndicate lead, Will Anderson, who joins us from Possible Ventures, a VC based in Germany and Australia. And will be focusing on getting to know and understand and become an expert on the Birchal First Syndicate and the investor side of our community. And these initiatives will also be shaped and informed by learnings from Rod, who we'll hear a little bit more from shortly, but also looking at leveling up and expanding the investor ecosystem around Birchal. And then the third key pillar and key area of focus for Birchal in 25 is regulatory expansion and strategic partnerships. There are several initiatives that have been on our policy agenda for government over the last few years. We are, it seems, heading into an election in the first part of next year, and we will absolutely be ramping up our efforts to get our policy asks on the agenda. We've spent some time in Canberra this year, and certainly Darren and offering his insight on things that have worked in the UK will be helpful in hopefully getting some of the changes that we need. As an extension of that is also the work that we're doing to collaborate with universities that are interested in using the crowdsourced funding regime to access alumni networks. Again, these are things that we have seen work overseas that Birchal is supremely positioned to leverage here in Australia. Now, I'm delighted to offer Rod some time to offer some insights about what's exciting and the kind of things that we'll be working on in the year ahead. So thanks, Rod.
Thanks, Matt, and thanks everyone for taking the time to dial in today. I didn't actually realise when I put my shirt on this morning that I'd chosen Birchal Blue. So there you go. I'm already in tune, which is great.
Fantastic.
But rather than get into the weeds, I guess I wanted to give everyone a little bit of an insight, I guess, as to why I'm here and part of this next phase of growth around Birchal. And a little bit about me. Firstly, more than 30 years working across management consulting, financial services, not-for-profit, and agribusiness or natural capital. But much of the last 20 years in financial services, including CommSec, which we've talked about, but growing our national wealth management business, listed company world, as well as the last nearly 4 years at Investable. And so you can probably see some direct parallels there between what CommSec has done in particular as the largest single sort of direct-to-consumer marketplace for financial services in the country and one of the largest in the world, but also right through to Investable, where during the course of the last 4 years, I've was part of the team, of course, and had the privilege of leading the team that grew total funds under management there by more than 3 times, grew the size of the high net worth investor syndicate more than 4 times, and really re-engineered the investment process and methodology to be able to look at, over the course of that nearly 4-year period, more than 10,000 potential investments across 26 different countries, and making more than 80 investments and delivering 4 exits. So, really lifting the pace, accelerating the pace of execution, and making sure that that execution was really focused on delivering value for investors. And I think that, the big thing for me in joining Birchal is, you've got to always ask or have an answer for the question of why. And the why for me was really clear. I think first and foremost, on the investor side, the big global trends of growth in private markets and, the trend towards private capital, and alongside the trend towards self-directed investing, those global trends aren't going away. If you look at virtually any sort of analysis and historical view on what those trends are doing, you're seeing significant flows into private markets, and investors taking a much more personalized interest in how they're allocating their own capital to deliver investment outcomes. So, it's really important that a solution like Birchal offers a really convenient way for investors to be able to get in front of those trends. And if you think about it, just within Australia from a macro perspective, broad brush, but around about a third of Australia's superannuation investment pool is self-directed. So providing easily accessible investment solutions via Birchal and crowdsource funding is a great way for investors to build their own portfolio. I think the other thing that's really important is, crowdsource funding is still nascent in Australia, but if you look at some of the offshore markets that Matt was alluding to, particularly the UK as a bellwether market, there are some clear things emerge that, crowdsource funding isn't just for technology or healthcare or commercializing technologies coming out of university, for example. It is very accessible to all different types of businesses to access equity growth capital. And I think that combination of self-directed investing, of big global trends towards private market allocations, and the ability for companies on the other side of the marketplace to be able to access that capital is very unique. So finally, given that Birchal is already the market leader in Australia, that was a big draw card for me. And I think from a personal perspective, the opportunity to support Matt and the team to play a part in helping this next phase of growth and this next sort of scale phase in particular, that's the fun part. So I'm looking forward to this next couple of years, and of course, happy to answer any questions that come up during the course of the webinar as well.
Brilliant. Thanks so much, Rod. And I might throw to Dom now, and I'm really keen to hear from Dom on his perspective as an investor, and as an investor that has been active in the UK and achieved some of those exits that we've spoken about, that we can hope to expect to see here in Australia over the next few years. And the focus on the investor, Dom, Ken, for your perspectives.
No worries. Thanks, guys. Can everyone hear me okay?
Yes.
Great. Yeah, I was living in the UK at some time ago when the crowdfunding movement really started over there. And so I had the fortunate opportunity to get in early and start investing in some of the platforms that were evolving, including Seedrs, which is now Republic, and Crowdcube, but also to facilitate some trades on the platform. I've probably got a few insights, and then obviously now I'm an investor in Birchal and participate in Birchal. Hopefully I'm one of the most active investors, but I'm also an investor in Birchal and an investor on the platform. And I think that approach for me has been a really good one. In the UK, because the market is a little bit more mature, if you're an investor in the crowdfunding platform itself, then you get early access to expressions of interest. And we've been doing that at Birchal as well here in Australia. So that does give you an opportunity to get a first look in, as a sophisticated investor, for example, get a first look into some opportunities which then have a crowdfunding raise coming up soon. It also gives the businesses doing the listings an opportunity to have some surety about the capital that they're raising before they go out to the market and complete their raise. So that's pretty good. I wanted to put into perspective for the people on the Zoom that it's actually formed a big part of my portfolio. So I'm known as co-founder of Up, the digital bank, but PIN payments or Euphemia, the family office, and other businesses along the way. But actually, what I worked out the other day is that we currently invest directly in about 60 companies, and then we invest indirectly in somewhere between 1.5 and 3,000 companies. So it's a lot of companies. And the reason why you can get that level of breadth is twofold. One is investing in funds, and then each of those funds provides you with scale. And the other is investing through crowdfunding, because we can make much smaller bets and we can spread our capital across and diversify our portfolio, which has been really fascinating. So when I look at the overall context, we've made probably somewhere in the vicinity of about $80 million worth of investments. Now, that's not the value of those investments, that's how much money we've deployed. And then if we look at crowdfunding, we've actually got the earliest and largest returns from our very early crowdfund investments. And to give you a practical example, is that I was one of the early investors in Monzo, and Monzo is now obviously a multi-billion-dollar company. And our little tiny investment in Monzo when it first started actually ended up becoming 3 or 4 or 5 investments, as we had follow-on pro rata rights. Every time they were doing another raise, the existing investors get a chance to invest more. And so I started collecting some rights for Monzo and buying little bits and pieces. And now that portfolio is really quite valuable. We haven't sold it yet, so we haven't got the returns. But one that we did sell was Nutmeg. So Nutmeg was acquired. It was a small crowdfund investment in the UK, and it was a robo advisory service. I made a relatively nominal small investment. I think it was £5,000 or something like that. A relatively nominal investment in the very early days. It got acquired for 1.2 billion by JP Morgan Chase. And so it ended up returning really significantly to its early shareholders. And even though it was a small amount of money, the return percentage or the multiple that we were able to achieve was really significant. One of the best investments we've made. And so I think that for us, crowdfunding has formed a basis to build our portfolio and to get traction with some big brands. Another good example is Impossible Foods. So they were doing a secondary transaction where the founders were selling some of their equity many years into that company. And they did that on one of the UK crowdfunders, and that gave us an opportunity to buy in. So now we're proud shareholders of Impossible Foods, which fits in with our sort of saving planet and people, climate change sort of thesis. But it also could creating, non-organic meat, or organic, but like non-meat meats. And so now we're proud shareholders, but we were able to facilitate that through a secondary transaction that happened on a crowdfunding platform in the UK. So just a few little ones there. The one message I wanted to send for the Australian crowdfunding market is that we've been able to back a bunch of great companies in the very early stages using Birchal and other crowdfunding platforms in Australia. But then when they do subsequent rounds, either venture capital rounds or follow-on rounds off the Birchal platform, after those businesses are more maturing over time, we've been able to participate in multiple rounds. So we start off as a Birchal investor on the crowdfunding platform, and then later on, as they're doing subsequent rounds, we've been able to follow on and increase our shareholding in those businesses. So that's been a really good experience. And I would say that about 40% of our investments into startups directly have been through crowdfunding as an initial starting point. So it's been a really awesome journey. And I think with Birchal's dominance of the Australian market, Birchal is positioned very well to bring some of those trends into the Australian market and then ride some of those waves as the markets mature. I don't know if there's a specific. I don't know if there's specific questions or anything anyone else wants to cover, but that's sort of a quick synopsis of who I am and how I'm involved and why I like equity crowdsource funding.
No, it's brilliant. It's absolutely perfect. I am mindful of time and wanting to leave some time for questions. So I might throw to Emily in a minute, but just like to say thank you to everyone who's expressed interest in our opportunity so far. It's an incredibly exciting time to join Birchal. The recent addition of Rod, of Darren Westlake, co-founder of Crowdcube, the feeling and the sentiment in the market that 25 will be an accelerating market it has been incredibly important for Birchal to bolster its position and really looking at the strategic initiatives into next year as we expand our footprint. So thank you for everyone that's expressed interest in our opportunities so far. The support this week has actually been overwhelming, which is great. We're kind of sneaking another raise in before the end of the year. It wasn't enough stress and excitement before Christmas last year that we're doing it again, but this is what we do. We're in the business of telling stories, building communities and raising capital. So really excited to bring this opportunity to the market again. But Emily, happy to answer any questions now.
Brilliant. So if anybody has any questions, please pop them in the Q&A box so that we can start going through them. But if we have a look back at 2024 and then looking into 2025, what are the key industry trends that you're seeing come through the equity crowdfunding market?
It is interesting that we tend to, and keen for Rod's insights from an equity capital markets perspective, but it's generally similar that you'll host an offer for a company in an industry that is fairly successful, and then there's lots of others that say, oh, I could do that, or I could do better than that. And then, like uncovering a range of businesses from a similar industry. So we've had really strong verticals historically in craft beer and medicinal cannabis. Aviation is, a kind of subcategory that we've had some success with Dovetail Aviation and Fly On E and Skyports raising over several rounds. Certainly Volt Solar and the excitement around that offer has uncovered some other solar industry businesses, which is an exciting development into next year, electrification and others. But the great thing about equity crowdfunding is it's very broad. It's a very broad spectrum of industries that this can work for. But Rod, did you have anything further to share?
Just one thing I would add. I think the two sides of the marketplace that we deal with in terms of companies raising as well as investors wanting to invest. I think from a VC perspective, there's been no diminution in companies, the number of companies raising. In fact, innovation in Australia, in my view, has never been more healthy. So that's not just across technology, that's across a whole range of different sectors. So the demand side for capital is continuing to grow. I think for investors, I think there's been some talk about a tech winter. I think there's some reality to that, which is a relative cost of capital conversation. As interest rates have gone up, investors have got lots of different options to invest in that might be slightly lower risk. Whereas I think as rates come down globally, the opportunity to allocate part of an investor portfolio into crowdsource funding is very attractive going into 25.
Awesome, thank you. So given the 70% market share that Birchal currently holds, what are the key takeaways for potential investors in terms of competitors and competitor analysis?
In terms of market share, it is an outcome of our strong focus on growing our industry to the full extent of its potential. So Birchal internally, and you would know this, Emily, we never measure our success against the performance of our competitors. We're focused on growing the Australian equity crowdfunding industry to 500 million in annual funding volume, or 700 million, or $1 billion and beyond. And if others come with us, well and good, and if not, that's okay as well. I think the competitive landscape, that there have been entrants, there have been exits. I think that the dynamics from a competitive standpoint must be improving for us. It is unfortunate when we see people exiting the industry, but I think that is a function of the market, consolidation to fewer, perhaps more established players. These are regulated businesses that are costly to run at scale. So, but our focus is less on that 70% market share of crowdsource funded volume, and how much of the the broader landscape for growth capital that we can facilitate in providing to businesses. And Business Growth Fund puts it at 38 billion funding gap. All venture funding is, I think, 3.5 billion based on cut-through figures. That's our focus, is how do we support as much of the financial system as possible. Ken, for others' thoughts on this too.
Yeah, I might just jump in, because I was thinking with the way the question was sort of asked, is that yes, Birchal has a dominant market share, but as you've just described, the market itself is growing. So Birchal grows with the market, even if the market share of Birchal decreased, as the market continues to grow and outpace the growth of any individual company. I think that's a very positive thing, and it increases competition, but it also increases the proposition for Birchal itself. The other thing, though, is that what we've seen in the US and the UK markets is the creation of like a horizontal scaling. So the creation of different markets and different products that then take advantage of crowdsourced funding. So we have to operate within the regulations in the Australian market, obviously. But in the UK, for example, their regulations have actually facilitated a lot of venture capital participation in crowdsourced funding. So when a venture capitalist launches, so it's not just companies that are raising capital, but when a venture capitalist or a fund is launching a new fund, often what they'll do is put a portion of that fund onto the crowdsourced market, and then you're able to actually raise additional capital through the crowdsourced funding market, which I think is really innovative and a really, really good idea. I love the regulations in Australia to be amended to support that type of activity. And then when you look at some of the things that Birchal has already innovated and started doing, things like secondary markets, helping existing customers to build their community, and then also sell additional equity or secondary equity on the platform. So we do see those trends happening, which means that not only is the entire market growing in just the primary equity crowdsourced funding, but it's also growing in breadth, where we're having different products and capabilities being additions to what crowdsourced funding already does. And so it's quite a bright future ahead.
Absolutely. Thanks so much. So this is currently the third public raise that Birchal is completing through the Birchal platform. Can you remind us how the valuations have evolved over the last few raises?
So our first CSF offer was in April 22. And that offer was completed successfully at $1 per share. We raised $3 million, a maximum target we achieved in approximately 2 hours. And there was approximately 2.5 million of oversubscribed interest. Our most recent crowdsourced funded offer was at 50 cents per share, and that was in December last year. And that was approximately $2.4 million that was raised over the course of 9 days. And as you are aware, as is evident by the difference between those two, it was a down round, and there was much that was explained and said about that in the lead up to that raise. Taking investors on the journey and understanding how we needed to meet the market. And something that we discuss with many of the companies that we host offers for is that market conditions changed. And, what was different between our first raise and our second raise was a very different interest rate environment, very different macroeconomic landscape, and, competition for investment opportunities and pricing of risk and return was very different. Investors generally understood that, and it was a successful offer. We raised almost all of the maximum target for that offer. Again, as we lead into this raise, the expression of interest process is a process of price discovery, and we're kind of engaging in that process like every company that does, and like we have before.
Awesome. And so the share price will be released when the offer goes live. Did you want to discuss that now, or just wait until the offer goes live in a few weeks' time?
As most companies that go through this process do, the share price is set in response to conversations with investors through this expression of interest process, and then it is made public when the offer offer document goes live. Yep.
Brilliant. So are you still looking at building a platform to trade shares of companies that are raised on Birchal?
So we've completed a successful pilot of what we call Birchal Trade, our low volume market. This was post our first successful offer, and that low volume market is still registered with ASIC, and that is one of several initiatives that we or potential solutions rather to this liquidity challenge, if you like, for crowdsource funded opportunities, which are essentially illiquid opportunities. There are many others that are offering alternative solutions in this space, which is a positive thing. And I'm referring to the likes of FCX, which is FinClear's registry business, which has recently received a tier 2 market license. I think one of the first in the world for their type. Also Liquidize, which is formerly Boulevard, which is offering kind of a market making type solution. And then obviously there's ASX and NSX. There's a range of things that companies might, or solutions that companies might choose to provide liquidity to their investors. Once upon a time, I think Birchal felt that we needed to control all of it and everything needed to happen within the Birchal environment. I think as we have matured as a business and we've kind of understood the plethora of opportunities that are available to companies, ultimately companies will choose the solution that is appropriate for them and for their shareholders. And from a Birchal perspective, it's important that we're engaging with these various providers and making sure that they're providing relevant products and services to our issuing clients and our investors, and that we stand ready to help them wherever possible.
Brilliant, thank you. Keen to understand your philosophy going forward on investments that are coming in through a nominee structure versus direct investment. Appreciate that there are pros and cons for both, but in regards to direct, there's a risk. And then we see examples of small investors creating a messy cap table for future investment. Therefore, they either get diluted or exited to clean up the cap table before seeing a value return. Can you comment on this?
I think what I'd say in general is that it was so important to the government and stakeholders when the legislation was being put in place that shares be issued directly to investors, that they amended the Corps Act such that anyone that holds CSF shares is excluded for that 50 shareholder test. So the drafters of the legislation felt that it was important that investors were issued shares directly and that they weren't held through a nominee structure. That's the law. These considerations as to whether or not that is appropriate is probably something that needs to be kind of taken up with government to see if that law needs to be looked at, and if it is, we're happy to kind of feed into that process and participate. What I would say about messy cap tables, though, is companies that go through or a crowdsource funded process should look at their governance arrangements prior to making the offer and fix that messiness by having the right governance arrangements in place. And Birchal's constitution is probably one example of many examples that can deal with, I suppose, this potential messiness. I don't really buy into this messy cap table kind of mantra, if you like. It's something that can be dealt with appropriate governance arrangements, and many companies have solved this problem. And it's one of the myths that I think we are actively trying to kind of solve and clear up as we're growing the industry. Yeah.
Hey, Em, just before we move on, I just wanted to say there was a question there about superannuation, and you've already posted an answer to it. But just for the people that probably that question illustrates, there might be lots of other people here today that don't know that it's already supported as an investment structure for equity crowdsourced funding, but that people need to seek advice and make sure it's the right structure for them and that sort of stuff. So if there is anyone on the webinar who had that same question, the link's been provided in the Q&A if you want to have a look, if you were thinking about doing it in your superstructure versus a trust or as an individual.
Thanks, Dom. Appreciate it. So another question, looping back into legislation and the regime itself, how does Birchal influence that in any way?
We have an open dialogue with government and opposition, and also open dialogue with the regulator. We see ourselves as stewards of an industry, of something that we want to become systemically important to Australia's financial system. So it's a big part of what we do is managing a range of stakeholders, including government and regulator.
Great, thank you. So there's a few questions for Dom. So what do you consider as a reasonable revenue multiple applicable to CSF platforms globally? Speaking UK, Oz, so would that be 20 times, 30 times, etc.?
I think it's a good question. I don't have a specific answer for that. What I would say is that what we've seen is some outsized returns, as you see in any market, from some specific crowdsourced funded opportunities like Revolut or Monzo, where those companies are now worth tens or hundreds of billions, and that is many multiples of their income in terms of what their enterprise value is today. But we've also seen at the other end of the spectrum a bunch of crowdsourced fundings that have returned just solid returns, or even no returns, or even negative returns. So it is actually very similar to any other marketplace where there is no average. There's a spectrum of what you would expect for any of those type of ratios. But my gut feeling is that there's similar to the venture market, is that you will see some breakaways and you'll see some really big successes. And some of the companies that we've invested on already today at Birchal, I feel like they're going to be really significant companies, and they're making headways and they're very competitive in their space. So I don't have a specific answer in terms of numbers, but I do think that you do see the full spectrum on equity crowdsource funding as you do in other markets.
This is probably a related question. It might be something that's quite difficult for you to answer, particularly at this stage in infancy in the industry as a whole. But do you believe that with your experience and the strength of Matt's leadership, that Birchal could become a unicorn company?
Yeah, I mean, I would answer this one also in a similar vein. I wouldn't say it's reliant on me at all. It's great that I'm a backer of Birchal. I've invested in every single round that Birchal have done, if people didn't know. So I'm a repeat offender. I really do believe in the vision, and I think that I can help provide input and steer the direction of what Birchal does to try and become that type of company, a unicorn or a decacorn or whatever. But I want to say this: it's not me. It's the team at Birchal that are doing such a stellar job. And then the other people that you saw at the start of the presentation, like Rod Bristow, like Darren, Darren's essentially the godfather, or the founder, the creator of equity crowdsource funding anywhere in the world, the first ones to do it. And so to have someone like that as a strategic advisor puts us in very good stead. And I often introduce myself nowadays, not as Dom, the co-founder of Apple, the investor in Birchal or whatever. I often introduce myself as the guy that works with Judy. Now, Judy is the representative for my family office who sits as an observer, and she is exceptional at providing strategy and direction and guidance for the management team and for the executive, including obviously Matt as the CEO. And then, Kate O'Keefe, I often say about Kate O'Keefe that she is one of the most overqualified founders in Australia. She was running a $10 billion fund. She worked over in Silicon Valley for 8 years or 10 years. She's been involved in some amazing, exceptional venture growth stories. And so she is the most blunt and upfront person that really challenges the management team and the board. So it's got nothing to do with me. It's got more to do with the whole team. I think that the team that Matt put up on the slide right at the beginning are the best team that we could possibly have in order to deliver the best returns that Birchal can deliver.
Oh, so nice, Dom. So I know that we're running out of time, but I suspect we can fit one more question in. What what are some of the key learnings from the US equity crowdsourcing ecosystem and some quick wins that Birchal can take in the future? So any low-hanging fruit, essentially.
Look, I'm going to bring in the UK as well. Obviously, I've had many conversations with Darren about this. We also have good relationships with US platforms as well, and that there are a range of additional revenue streams available to us in terms of quick wins. That slide, the importance of marketing services and other things. Also looking at our fee structure. We'd had a 6% success fee from when we launched in 2018, and having moved up to 7.5% to be in line with more of the global platforms. It hasn't really had an impact on on market share, on our pipeline so much. So looking at how we can optimize our fee model is also important. And then looking at how we can be more efficient in building audiences and just providing relevant stories and content to our audience as well. So how can we add value on the investor side and earn value as well? It must be said. So, what is it that people want? Can we provide it to them, and can we charge for it? Keen for any other thought? Please chip in if there's other thoughts as well. Yeah.
There's one more question, which I think I already know your opinion on this, but what stops potential VCs and investors from trying to go directly to startups in their infancy rather than via the Birchal crowdfunding platform?
I'd like Rod to take that one.
No, happy to. Look, as an early stage business, there are options available for them to seek funding, and those options are plentiful. And in fact, this time 10 years ago, there were much fewer options than are available now. I think that what people tend to forget, though, is that it's quite complex for an early stage business to be able to engage with individual investors one by one. And so, if they came to Birchal and engaged with our process and raised $2.5–5 million, whatever the number is, that's a very low friction way of raising enough capital to be able to springboard into that next phase of growth. For a similar VC round at an early stage, that's probably engaging with 3 or 4 different investors. Everyone will have different legal terms. They'll all have different requirements. They'll all have different pricing. Someone might want to lead, someone might not. So the process for a company to go and raise capital via VC is not as simple as it appears from the outside. Sounds pretty sexy, but there's a fair bit to it that is quite complex and takes a fair bit of negotiation, patience, and time. And so, my time at Investable, probably in the top 3 of things that we would be talking to companies about is raising that next round of capital and making sure that there was a really clear path and enough runway to make that happen. Birchal does that in a relatively frictionless way that delivers a really good quality outcome. It's professionally managed, and the company, as Matt alluded to before, one of the nice benefits is not just all of the work that's done to support the company and help them market that offer successfully, but it's going through that process to make sure that the entire governance of the business improves and gets ready for the next round as they're going through the raise. So, crowdsource funding, in my mind, has a very clear and valuable niche that can be exploited further. That works hand in hand with VC. Don't get me wrong; it's not either or, but for some companies, it will make a lot more sense to go down the crowdsource funding route. For others, it may not. But I do think that it's a very viable source that is going to become more and more well known.
I just want to add to that, Rod, just picking up on your last point. I know we're at time. I just wanted to say we would encourage VCs to participate in rounds both on platform and off platform. Actually, there's been some examples where companies have raised a round and they've filled their allocation through Birchal, and then they've had subsequent allocation with the VC. And that's what I see as running a family office, is that we often end up seeing a lead investor and then several other venture capitalists coming on as well. Imagine Birchal as the lead investor, or imagine the venture capitalist as the lead investor and the Birchal participants as being co-investors in that campaign. That's something we'd actually probably encourage in the market and see more of that type of activity. We don't really see it as a threat.
Great. And just a final one, because I know this will be a quick answer. Is Birchal still classified as an ESIC for investment deduction tax purposes?
Unfortunately, no. We were once upon a time, but we're no longer qualify as an ESIC, which is a bugbear, because if we're in the UK, there would be incredible incentives similar to ESIC that would just be available, and this is going to be a key plank of what we're going to ask and pressure government for, because investors should have access to these incentives in a similar way that wholesale investors do, investing through ESVCLPs and things like that.
Brilliant. Thank you. So we'll finish up here because we've gone a little bit over time, but I just want to say thank you so much to Rod, Dom and Matt for their time today, and for everybody who came to watch as well. And thank you for your fantastic questions. If you did want to rewatch it, we will send around a recording. And if you haven't expressed your interest yet, please do so via the Birchal platform. If you've got any questions, just head to birchal.com or reach out to us at support@birchal.com. But thank you everybody for coming.
Thank you.
Thanks, guys.
Thanks,
See ya.
everyone.
Bye.
Thanks. Bye.